Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video comes after 2 3 months of hiatus, and I have been going around, and there have been people coming in to my house, so I was busy with some functions, etc. So that's why I could not put up videos for the last few weeks. Uh, so we begin today by analyzing PG Electroplast. So today I'll analyze PG Electroplast as to what really happened, that the stock is down 20-25% in a matter of couple of days, and what is going on in the EMS space. Plus I'll discuss about the markets as well. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do with their own due diligence and research. I am not a member of the NSE and BSC, and that I am not a portfolio advisor. Whatever discussions with respect to markets or investments I have is purely on the basis of my experience into the market over the last many years, 11, 12 years. And whatever decisions with respect to investments you take, kindly do take that on note that is laden with market risk, and do consult your financial advisor before doing that. Before I talk about the markets, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you ask me questions, seek out answers in greater detail. You'll have analysis on companies, discussion on domestic and global markets, updated watch list from time to time. And on a weekly basis, I do come out with companies that I believe from a 5-10 year perspective can do well in terms of their business, and the prospects are looking good. So I analyze that. So if you become a member on Patreon, on YouTube, on WhatsApp, then you can do that and you'll get all these benefits. Now, in order to discuss about the markets, let's first get to, we'll discuss about PG Electroplast in a bit, but I want to just give you an idea of the markets and where we are, because it has been about 2.5 months since I had last discussed about stocks and markets. So basically we have been going down. So if you look at the Nifty, we are down big time from around say these levels of around 25,000 600. We are already down over 1,000 points, and similarly on the mid and small cap. So unless we go above the 50 DMA on these indices, the markets are expected to be in a lower trajectory, and we may go lower. The 200 DMA is around 24,000. We could breach that, and we might head towards say levels of around 23,000 or so, 23,500 or so. There's a possibility. So nothing like I'm giving you a trade or a nifty trade or like that, but just to give you an idea, the market is in a downtrend. India VIX is lower, but now is cropping up. If you look here, the VIX was around 10 and now it has gone up to 12, 12 and a half. So that is cropping up, and the US dollar index is, sorry, US dollar INR figure is closer to 88 rupees per dollar, 87 and a half to 88. So that is not auguring well for the market, and that is probably the most important reason as to why the markets have fallen over the last month or so, because dollar is becoming strong, and it has become extremely strong with the, you can say, currencies from India and the neighboring countries, and you can say the emerging market currencies. And that is a direct, that would have a direct effect on how the FIIs would treat India, and we are seeing exodus of FII money over the past few weeks already. So couple of months, last 7-8 weeks, we have seen continuous selling from FIIs. And if you look at the dollar index as well, and no longer that it is at around 97 or so, or it used to be below 97, 96.6 or around that was low, and now we are headed towards 99, 98.2, 98.3. So all that combined, I believe the market could be under pressure. We are seeing the political scenario also panning out in that manner, that the government, it looks like, under pressure. So we could see further sell off, or at least if not sell off, then I can't see this market going higher on a short term basis. On long term, yes, we could see momentum later on once once the market settle down with the kind of earnings that we are getting currently 1.5% earnings growth for this quarter. So we are expecting 6 to 7% earnings growth for FY26. So that could take us to around 1190 to 1200 rupees for the year, which is extremely low and probably benign, considering we were looking at 1230, 1235 rupees probably two quarters back. So this is not looking good for the market, and that is why we are seeing such kind of sell off now. Whether all of the selling is priced in at the moment, or we are going to see further selling, I really don't know about it. Neither I'm trying to predict levels here of the Nifty. What I'm trying to tell you is that the market is in a bear grip, and this could continue at least for the next 2 weeks, 3 weeks at least, till mid September, once this tariff things boils down, or at least some resolution comes about in there. Uh, Coming to the stock, so the stock in focus absolutely currently is PG Electroplast, a very interesting company in the air cooler, air conditioning space that we have, and that had produced strong results over the last 4 5 years. And now they have come out with a guidance cut, and that has resulted in the stock catapulting probably around 25%, and it is already down somewhere around uh, 40% from the highs. It's already down 42% from the highs of 1055. The PE is still, after the kind of carnage we have seen over the last 2 3 days, the PE still remains elevated at around 60 62. Why I consider this PE elevated, we'll discuss about that in detail now. So what we have seen is that in the June quarter, which is their strongest quarter, mind you, because this company is purely a company into the AC, air cooler kind of space. So we have seen how AC companies have not come out with very strong commentary, neither they have come out with very strong numbers, and we've seen what happened with Blue Star from 2100 going down to 1500 and now recovering a bit. And similar was the fate with uh, Johnson Control, Hitachi, Voltas, etc. all have come out with very muted numbers. So it is no surprise that PG Electroplast has come out with sales growth or a revenue growth of around 14 15% from 1320 crores to 1500 crores, and operating profit has dipped from around 130 crores, it has dipped to around 120 crores. So there has been a decline in profitability, decline in margins from 10%, it has now dipped to 8% again, and eventually the net profit from 84 crores has dipped to 67 crores. And this is like for like comparison, as we are looking at the June quarter last year, which is pretty good. FY25, especially the summer season, was pretty good. So basically, higher amount of monsoon with low summer heat across India has resulted in what resulted in the company coming out with such results. And along with that, what has happened is, if I could pinpoint one other big factor, it yes, we know that the management commentary is one thing that I'll just come to that. But if you look at the results in detail, you look at this figure of inventories. So what the company did was, they generated a lot of cash, and the cash flow was pretty good in the March 24, so in FY24. So what they did from those reserves of around 1,000 crores or so, and the reserves have kept increasing in this period of FY24, FY25, is that they have bought in a lot of inventories, because there was a talk of component parts price going up with all these trade war situation that we are seeing globally. And so this inventory part was considered a real asset for the company. It was considered a very strong point that the company is currently having such inventory ahead of the big summer season from May to say April onwards, April to June. And what happened was the April June quarter this year has not been that great. Plus, they had heavy inventory which they were unable to sell. Hence, there was a lot of pressure on the margin. So, this was another factor that backfired for the company, and that's why the numbers dipped sharply. And we have seen that. If you look at the cash flows, the company has come into a real trouble because the cash has become negative. Even in March 25, if you look at this figure of cash flow, the figure was negative because they built up a lot of inventory from the cash they had already. So now working capital debt increased because they needed money to keep their business going, paying salaries, rent, etc., electricity, and other fixed costs, and that resulted in the company coming out with such muted numbers. But I am not surprised because across the board AC sales have been extremely low across India with all brands. So this was no exception, and hence the numbers were down. So now what? And now the things that have triggered uh, further selling. So if you look at it, when the results came out, there was selling, and the stock was down around 8 to 10%. But then there was a con call, from the management, that was around 3 p.m., 2:45, 3 p.m. And what that resulted into was further selling and the stock falling 20%. And the reason for that, or some of the reasons for that, has been that the product business contribution, which is 77% of the total revenue, uh, is expected to be is expected to do not a lot of growth, say in FY26 altogether. So Rome AC business grew by 15%, which was decent but not extraordinary. Now what they have done is the company has cut guidance. So around 3 p.m., what they came out with, that their guidance have been cut, and the growth guidance from around 35% has been cut to around 18%, 19%, as against, as I said, 30% earlier. And you need to understand that the profit guidance, which was around 30% growth for FY26, they have now guided for 3 to 4% growth at best for the company. So if profitability will not be there, then of course the PE will shrink for the company, because the PE was already elevated at around 70 times. And mind you, the stock was not at its highs. If we take at its highs, then the stock was earlier trading at a PE of, if you look here, then it was trading at a PE of 138 in Jan 25, and just recently, as in April, it was trading at 120, 118 times. And just about a week back or so, around 18th July, so just about 3 weeks back, it was trading at 80 times. So that had to be reduced, and that is exactly what is happening. So we will see PE contraction, high inventory figures coupled with muted summer season resulted in such kind of numbers. And even other EMS companies did not do well. So we saw Dixon, we saw other companies like Amber falling 4 to 5% along with PG Electroplast. So we'll see how things pan out. But I personally see further selling coming into the stock, and the PE shrinking, because if a company is saying that it's going to be flat, the growth is going to be flat for the year, then I don't see this PE expanding further. And at a PE of 62 for a flat growth, that is highly expensive. So let's see where it settles down. Long term perspective, in my opinion, and that's a disclaimer, I'm heavily invested into the EMS space and not in PG Electroplast, but I am invested into this space of electronic manufacturing. I believe over the next 3 to 5 years, the this space is going to do extremely well. So we need to find out as to how things pan out on a shorter term basis for PG Electroplast, and then decide whether to get in or not. But overall, for the industry, the PE is high, the valuations are high, but we expect decent growth going forward over the next 3 to 5 years for this whole industry. Not quite. I'm not saying straight for PG Electroplast, but for the industry, the growth seems to be picking up and should continue to be good. I won't say it will accelerate, but the growth should continue to be good. So this was a video on PG Electroplast and the markets. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post, and kindly do support me on Patreon. Thanks a lot.